Welcome back. I know this is a crazy busy time of year, so appreciate you taking a little bit of time out to continue learning as we move through this series. A couple of things I'll hit on here at the beginning and then touch on at the end as well. What we plan to do is on May 19th, so 2 weeks from today, we will do a follow-up personnel session based upon your feedback because one of the challenges each week when I do this is how do I hit topics that are detailed enough to help the person that needs the tools, and then what about the person that's just kind of leading an accounting department or finance department and just wants the high level kind of top of the mountain information. So as we try to cover a little bit of both, since personnel is such a major topic, we're going to ask that you contact myself or Chelsea with what would you like more information on that you heard today, and then we'll follow up on the 19th with some additional personnel information. So today we're going to talk a little bit about how to evaluate personnel costs as you look to amend your budget. In the 23-24 ASBR, which takes into account every school district's ASBR, indicated that 55.8% of Missouri expenditures were spent on wages and 18.2% were spent on benefits. So a total of 74% of budgets in the state were spent on wages and benefits. And so, and there will be some schools where it's significantly higher, but we want to certainly spend some time on personnel and talk a little bit about how you amend your budget. And as a reminder, in Missouri, the statute says you have to have a fund or you have to have a budget approved before you can spend money. So if you, for instance, approved a Fund One budget that had expenditures of $10 for the year, and now you get to June and you're going to spend $11, well, you have to have an amended budget approved by the board that allows you to spend that 11th dollar because to date you only have authority to spend 10. So that's why amended budgets are important. We'll look at ways to build next year's personnel budget. We'll talk about the value of personnel coding. We'll look at some other considerations related to personnel budgets, and then we'll provide some tools to help you do that. I want to quickly hit on a prior session question. The question was raised at the end of the last session about transportation transfers. And I talked about you can transfer anything to cover Fund 4 expenses out of operations into Fund 4. And the question was asked, well, what about the transportation schedule that DESE shows on their website? And so I wanted to hit on that real quick, and then we'll get into personnel. So the question was about Chillicothe. And so what I've done here is I'll show you where this came from, but it basically says that based upon your ASBR, you had $124,000 in Fund 4 cost in transportation. And what I didn't mention, and what I appreciate in the call out, is that you also have the ability to transfer your bus depreciation and calculated facility depreciation. So in total, Chillicothe has the ability to transfer 124,000 to cover their capital, and then another 91,000 to cover their depreciation. And where that comes from is you can look on your ASBR, and in your Part B expenditures, you can look in the capital outlay column for what you spent transportation capital projects. And here is the link, I hope. So this takes you to DESE's page, and when you go to fund transfers, you can pull in this transportation transfer, and that will show you the information that I just shared. And then the ASBR link, I'll show you that real quick, I think. Oop, back one. Well, for whatever reason, it's not taking me there. I'll fix that link in your presentation, but it'll take you to the ASBR. You can search, and it's just a call out page on the left toolbar where you can look at your bus depreciation and your facilities depreciation, and just to understand that you can transfer that money as well. All right, so let's get on to um, personnel.
Hey,
So,
Tim, just to
yes,
clarify, they can transfer all that in addition to the 7%.
correct. Yes,
Okay.
this is specific to transportation in addition to your allowed transfer.
Okay. Thanks.
Yep, thank you. So this, just a reminder for budget, why we talk about budget. What are we doing? Well, first of all, we got to meet the statutory requirement, but it also creates a roadmap for you to follow as you go into the year. What is driving where we're spending our money? It should show a demonstrated commitment to the CSIP. So if somebody says, um, are you putting your money where your mouth is? So we've done this CSIP work. Does the budget reflect that? So this should be a demonstrated commitment to that. Stakeholder accountability. Your staff, your parents, your community people. Can you show them that this is how you're spending their money? And then program compliance, when we get into the EPEGs, federal programs, IDEA, maybe it's a grant program, and are you tracking it using project codes so that you can comply with the requirements of those grants? And then guidance for your accounting department. I field multiple calls from clients based upon just how do I code this? And so by understanding your coding and understanding how your budget's put together, you can really help support your accounting departments. So that's kind of the details of the why, but what is the value of a budget to me as the superintendent or as a leader? Um, and the first thing to understand is that it is a working document. It is prepared with the best information we have available at the time, and you have the authority and expectation to provide the board with an amended budget when it's merited. So you start with the best information. Better information happens, and so as that new information comes, you have the authority and expectation that you will present that to the board. How does it help me? Well, I think there are a lot of ways that it can help you, but it can really help you um, when you have to explain um, that you're investing in the goals, that you can show that information. It helps you support tough decisions. When people come to you asking for money, want you to make the decisions, you can lean back on that budget to say, this is what we decided. Collectively, the board approved, and so I've got to follow this path. I think it helps you with transparency. If you can point to the budget about helping with your decision making, that gives you a transparent um, method for supporting your budget. Uh, is it easy to track? So if you have a budget, and a lot of times I see this when a new superintendent comes into a school district and they're given a budget that they didn't put together. Maybe it's not in a format they're used to. And so they're really scrambling to make clarity of it and to be able to lean into it. But when you create your own, you should create it with a clarity that you can understand and be able to talk about. And then will I use it? I think that's self-explanatory, but if the budget is a document that is like some of the documents we used to create for us, the older people in the we had used to have to create binders worth of things that we were going to do, and then we stuck them on the shelf and we never pulled them off the shelf. If the budget is like that for you, then I would encourage you to make it more understandable so it's a living document for you. And then lastly, can I coach someone to help me? Is your budget able to shared with your principals and your directors and your assistants, people that can monitor their own budgets and you can support them and they can therefore help support you. So there's value in it. So amended budget, I've talked about this before. I think the amended budget, especially when it comes to personnel, is a great way to start your current budget process, because it makes you evaluate the accuracy of what you had. So you're digging in, do I have enough in Fund 2 to cover what I'm going to spend on certified wages? And it causes you to do some digging. Then the other thing I think it does is it refreshes your memory about types, amounts, how items are coded. One of the challenges, again, that a new superintendent coming into a new district is going to have is maybe they have different pay methods. Maybe they pay for different things. When I pick up a new client, that's one of the things that I spend time. You can look at what you think the wages should be, and then if you see more wages, you have to dig to see what created that. And so digging in to see the current year, what's going on, would remind you of anything that you potentially overlooked. Maybe you added a transportation route during the year that wasn't on the initial notes of how you built the budget at the beginning of the year. Well, we've got a new route. That's going to remind you, hey, I need to add that route when I make the new budget. So we're going to talk a little bit about some amended budget tools that should help you. And so the first one we're going to look at is a cash flow sheet for wages. And I would encourage you to consider making this type of document. And what it does essentially is you can go back however many years you want to go back and put in your monthly expenditures. And right now I'm on the wages only tab. So it would be all 6,100 object codes. And you can go back, get your monthly data, put it into a spreadsheet, and then create a formula where it says, based upon my historical trend and based upon what I'm currently spending per month, how does that project out to go against my budget? You can do that with wages, you can do it with benefits, and then if you want, you can even go certified and classified schedules so that ultimately you're getting to wages and benefits together. And in this particular case, we look to be $3,300 to the good on a $8 million budget. So that was a pretty good projection on where their uh, wages were going to be for the year. The other thing it allows you to do is it allows you to track, which I think is always important, especially if you're coming into a new district. Because if this line, we talked about it before in the school business, it's a very cyclical business. So if this line gets way off the beaten path, it's time to take a look. In this particular case, we took a look here in November, and I believe what we found was they paid some baseline teacher salary grant or something that made this elevate, and then came back down in more in line. So um, uh, I would encourage you to look at some type of cash flow document to help you track wages. Again, 80% of your budget, it's a good idea to know where that's tracking versus the budget. And I will just add to that that the more months you get into the year, the more accurate that calculator is going to be. So if you're 3 months into the year and you're way out of whack, it's worth some research. But if you're way out of whack after 10 months, then there could be an issue. Second document I'll talk about is personnel tracking, and let's see where it is. So this is one that I did at my old district, and I've extracted names, but for the larger the district gets, the harder this becomes. But I did this every uh, late winter. Once we started into hiring season, I would prepare this for our principals, directors, so that they could start tracking vacancies. And if there was a vacancy and it got filled, then we put the new person in. And this just does a nice job of tracking FTE. And so if you're trying to cut some FTE, as we start talking about budget reductions, this is you can track FTE kind of in real time with your staff, and they know all of the positions. Like I said, the larger the district, it becomes a little bit more challenging to do that one. EPEG's budget and percentage of budget review, we'll get those on the next slides. So it's important that you understand your EPEG's budget when you're dealing with personnel. And this is, I think this is a federal or a Title I budget grid here. So the way you read this is we're paying certified wages out of a 1200 function code, and we have budgeted 267,650. So when you get ready to request those payments from DESE for those teachers, you need to make sure that you have uh, a general ledger code certified 1251 supplemental instruction wages, one of the elementary schools program code 45100 source 4, that code is tracking these teachers that are making up this $267,000 budget. So really important for these programs that you get reimbursed on that you're tracking it correctly. I'll talk a little bit later about cash management. So then I just put this in so that you'd have a quick reference for checking your wages, your individual account items as you go through the year. So what you're seeing here is a screenshot of uh, my Title I expenditures for the school year. It would have been after the April payroll was run. And so you can see we're right on, and somehow ignore the red circle up above. It should be one above there in the 12 paid teachers with their first check in September. Somehow that red circle got moved, but it should be on 66.7. So in other words, after the April payment, they have received 8 checks. So we should be 66.66 through the budget. And you can see we're spot on for the first four. This one, the fourth one's a little bit low. Maybe we had their salary amount wrong. Could be a number of things. The next two are things that we would have needed to take a look at because we're showing that the RISE literacy coach was already at 97% of the budget, and we still have 4 months to pay. So got to do some looking here. And then we got the Goodman Title I literacy coach getting year-to-date activity, and we didn't have a budget there. So we got to do a little research in here to make sure where our coding is off or where our budget needs to be amended or what went on there. But the schedule up top shows you the different months of where you should be. So if your teachers or if your staff like principal and counselors If they get their first check in August, then their percentages are going to be a little different when we're checking their line item. If it's a 12-month employee, then obviously that's different as well because they got a July check. Right. So hopefully that'll help you kind of understand after you've run the payroll for that month, you should be X percentage through the month. Oh, let me also say that's also a good reason to put things like baseline teacher salary grant, career ladder, those type of items in their own line item so that they don't mess up these calculations on what just should be percentages of base salary. All right, so as we start thinking about the new budget for the next year, there are a couple of different ways to start into your personnel thinking. You can start it by just start by scratch. So I'm going to start putting every single employee on a line. I'm going to put where they're at, and that way I can tell exactly what percentage increase they're going to get. And for a district with a manageable number of employees, that might be the way to go. Then the other way is to start from a change in prior year resources. So in other words, we've run the revenue side, which we talked about in session one, and we've decided that we have 400,000 more new dollars for next year, or 200,000 less dollars for next year. And we're going to carve out X percentage of that for personnel. So in the first example, $400,000 of new money. We've looked at recurring costs, and 200,000 of that is going to have to go to recurring costs. So I have $200,000 to invest in personnel. What does that look like? So that's starting from a change in prior year resources. I have this amount of money. Now I've got to go back and figure out how I'm gonna use that to in insurance increases, raises, etc. And then there's always a hybrid of the two. So the things that are good at starting from scratch, good for small schools, you identify each employee. So you're going through in your mind and you're listing them. It's easy to identify the raise or the percent raise for every employee. So if the board wants to know, what did Joe the custodian get in a raise, you can say you got 2.5%. X number of dollars. Um, it is the most accurate for cost estimates because you've listed every individual in the district. What I would caution is be sure and check for extras. So, in other words, you've listed everybody out, you've got this year's salary or wage or whatever, and you get down to the bottom and you say, it should be $1.5 million, but I know I'm on target to spend 1.6 million. So what is that other 100,000? Oh, I didn't include a stipend, or I didn't include overtime, or on and on and on. So when you start from scratch, you can do your employees, but at some point in time, come up with a check number. You can check back to what's actually happening to see if you've included all of their different types of pay. Uh, you can work in a hybrid format even for larger schools. So you could maybe you're listing instead of every individual, you're listing 12 teachers at Smith Elementary. And so you're not at the individual level, but you are at the FTE level. And again, compare to prior year to limit misses. And again, misses could be overtime stipends. You didn't include gate workers, you added a route, etc. When you start with new money, um, you're basically, like I said, determining how much more or less that I can spend. And then you have to create an analysis of the impact of different scenarios. So if I have 200,000 additional dollars to spend, I need to know, well, how much is a step? How much is it if I pay 15 more dollars of their health insurance? What if I want to put $250, $1,000 to the base. How much does that cost? And so you need to know the impact of those different levers so that you can begin to figure out how best to spend that $200,000. And then I think it's important that you understand the average raise across the salary schedule. And we'll talk a little bit about what that looks like because your raises aren't going to be consistent throughout the entire schedule. So here are some salary schedule basics that I think you need to understand. Average raise, I just talked about. Compression. Compression is the difference between the bottom right corner of the salary schedule and the upper left number. So basically the difference between base pay and what the most experienced, veteran, educated person on your salary schedule gets. So the bottom right. So in a real simple term, if the base pay was 40,000 and the most you could earn as a teacher in your district was 60,000, your compression ratio would be 1.5. So it's 50% more at the bottom than it is at the base. And you'll hear your MSTA and they all put that in their books. Classified, is it a schedule or are they on a percent raise? So in other words, is your custodian schedule $16, then 16.20, then 16.40 just down, or is every custodian listed with their individual pay and you're going to give them 3%? And so the schedule is more of a placement schedule. And what I mean by that is if you hire somebody and you're going to give them 3 years experience, they're going to start at 16.40, but that's just where they start. From then on, they're going to get whatever percentage raise the custodians get. So that's the difference between a placement schedule and an actual schedule that they're paid off of. We'll talk about index versus fixed steps, an anchored extra duty schedule, and then software capabilities versus manual manipulation. So let's talk. I'm going to show you a couple of examples of things that I think are important um, as you develop salary schedules. So this is a salary schedule, and the first thing I'll point out down here in the bottom right of this first column is 1.51. So this particular salary schedule has a compression of 1.51. So I don't remember what year this was. Let's say this was 2024. And so I started with the current schedule, what we were paying teachers. Then I determined what the steps were. So you should all know what your steps are. And so that then creates a second schedule, which is the same schedule with a change to the base and based upon these steps. And you can change the base. It should then calculate through your schedule, and you'll see this one remained at 1.51 compression. But what this allows you to do, if you will set it up like this, is calculate the percentage increase for every staff member moving from one cell to another. So for the teacher that was on the base, step one BS last year, going to BS step two this year, they would get a 3.86% increase. For the teacher, once, and you can see once the salary schedule is frozen down here, all they're getting is basically the change in the base because they're not getting any step increases. So these percentages stay the same. What these yellow lines are for is if you don't want this teacher at the top left getting the only decent raise, then you have to think about, do I make some changes periodically in the schedule to steps so that it helps increase a little bit of these raises down here in the bottom right, if that makes sense. So not only did they get the step and the base, but we changed a few of these steps along the way to help grow this percentage down in the bottom right. So this is important work to do if you're trying to help your board understand, because you can then, if you're doing it in Excel, you can highlight the whole batch and it will say the average raise for teachers' salary steps was 3.32%. So that just helps you with communication. If you're meeting with teacher groups, yeah, you're not all getting the same percentage, but here's what did change. Another example would be a schedule like this para schedule. And point this out, this is a little different because you're going to see the columns were based upon different levels of work for the paras. And we had a charge to get these first three levels up. They were below market. We needed to get them up. So what I did was this is the count of every person being paid out of each of those cells. So I could determine the actual cost of what it presently was costing us for our paras. 2.1 million. Came down here, created the exact same thing with a different schedule here, raised the base on these three levels, could then say, hey, the average raise for those three columns of paras is going to be 13.5%. So we're getting them back up to where you would like them to be. And the cost of doing so is going to be $230,000. Right. So a different way of one is just looking at the individual cells and what the percentages is. This is a method where you can actually look at what is the cost and what is the overall cost going to change. So you have to have the schedule and the count number of your employees. And just a tip, if your district is a SysFin user or really any user, but I know specifically in SysFin, SysFin will hold a count number for a vacant job, which is good for budgeting. It's not good if you've got several vacant jobs in there that you're not intending to fill. So having somebody check that job list and make sure that all the vacant jobs are jobs that are actually intended to be filled is important at that stage. All right, carrying on. So classified schedules, every individual has a rate. The schedule is for placement only. I was telling you about that. So you create a place where new people hire on at that rate, and then from then on, everybody gets the same percentage raise. And then there's the different way is everybody is on that schedule, and so they're just moving down. So if they're going to get more than just their step, you have to adjust the base. Benefits of both. All right, let's talk about an anchored schedule. Um, an anchored schedule is where you tie one of your schedules to a number that once that number is adjusted, your entire schedule changes. And the most common one I've seen is tying extra duty to the teacher salary base. But you may have an administrator schedule that is tied to the teacher base, and it's a multiplier. The reason for this is there are a lot of reasons. It simplifies it, but also I think in some ways it's politically helpful in that you don't every year you don't have to go and explain why the band director or the football coach is getting $100 stipend increase. It just the board has approved a stipend schedule that says the head football coach gets 15% of the base. And so when the base changes, it automatically gives everybody in the schedule a raise. So, and then they can, you can always come back and review the extra duty schedule, but for purposes of board approval, once they approve the new teacher base, it moves throughout the extra duty schedules. So that's what an anchored schedule is. Here are some examples: multiplier base, In my example with the paras, the columns were based upon demand of the position. So you can say, it's a 10% more work for this job. And then secretary schedules are often a multiplier of the least days worked. So in other words, they all trigger off of a 9-month secretary schedule. If you work 10 months, you get 1/9 more, etc. An index schedule is a schedule that every step grows by a percentage, not a dollar amount. I throw this out there just so that you're aware that's what it is. It always keeps the compression ratio the same because every step grew incrementally the same. It gives everybody the same raise, but it becomes cost prohibitive at some point because you have some really, really large steps at the bottom of that type of salary schedule. All right, benefits. Here is a slide that you can refer back to for calculating your benefits. And again, remember, I think it was 18% of your budget statewide was spent on benefits. And that's everything from the 14.5% you have to pay on your PSRS certified teachers. And remember, when you're calculating that, it's not just their wage, but it's their wage plus their board paid benefits. Get multiplied times the 14.5%. Medicare is 1.45, and then your employee insurance is considered a benefit for totaling that out. Classified, it's a little bit different. You have a lower percentage for peers. You have the OASDI Social Security, which is 6.2. They also have Medicare, and then their employee insurance. I'm gonna move quickly through a little bit of this because I'm running out of time. But um, knowing your software capabilities can help you project. It's excellent for some quick analysis. One of the things I mentioned was the vacant jobs, the overtime, different things that maybe your simple schedule in your software doesn't pick up. And then some challenges with if you've got 36,000 in your salary schedule and you're supporting that with $4,000 a baseline teacher salary grant, you can have some challenges with using your software only. Yeah, I'm gonna move on. All right, considerations, your CSIP goals, your personnel decisions and investment should match your CSIP. Um, let your CSIP help those budget decisions. And my folks got tired of hearing this, but people matter. Know where leadership is critical to meet your goals. It's not just about numbers. And I'm not just talking about leadership being directors and central office and those type of things, but leaders at the building level and program leaders and things that drive culture. Sometimes it's easy to just say to think about numbers, but when you're making personnel decisions and dollars and cents decisions, it can't just be about numbers. It's got to be about people and who you need to keep moving forward. Understanding market and being okay with the fact that you have to tell your personnel. I remember a meeting one time that I had with a group that just said, "Listen, we are in the market for what your position demands. You may want to be paid what teachers pay, but we are in the market for your position." And when you start talking about classified staff, never lose sight of the fact that a $600 a month health insurance is a $3.75 an hour benefit that they probably are not getting at some of the other places they're comparing hourly wages to. So just understand that we still are market driven when it comes to personnel. Cash management rules, just hit on this real quickly. Actually, I'll hit on this here in a minute when I come to coding. But this is for applying for funds from EPEGS driven programs. Just understand that if you request it after from the 21st to the 1st of the month, you should get it with your DESI payment. If you request it from the 2nd to the 20th, it comes usually at the end of the month, and that is really important in June. If you're trying to get that last payment in the month, you need to have it requested by the 20th. So here's why coding makes a difference in that cash management. Had a recent incident where a company got done for not following cash management, not because they didn't hire the person, not that they weren't paying the person, but they were requesting money from the state, and there was no expenditure in the account line that matched up with the grant. And they said, well, you can't apply for that money until you have expended it. Well, they had expended it, they coded it incorrectly. So making sure that coding is correct, and then your coding directly impacts your maintenance of effort, a big deal. And again, these are things you might want to say, hey, we need more of this on the 19th. Coding can impact perception. Where you code staff people to. Maybe somebody's watching specifically your executive admin line, the 2321. So who's getting coded to that account? And I give some different examples here. And also understand that your year-end numbers have to be reported on the budget. So your 1111 is going to be compared to the prior 2 years of elementary expenditures. So how you code those expenses are going to be easily identified year over year. And so that's going to be scrutinized. Keep in mind how you're coding new employees. Summer school, July and August checks for teachers, all of that can be paid in the next year. I've seen districts that will record it, but teachers don't want, they want that monthly check for help them with budgeting. So they delay paying it into their bank account until July and August. But all of that has to be accounted for in June. So you got to run all of the payrolls and have them on the books by the end of June. And if you think retirement, they need the wages reported in the year that they were earned. And so that's why you do that. A couple of quick things on 6200. Work comp and unemployment are considered benefits because they're in the 6200 object codes, but they're not tied to individual employees. So when you're thinking about your total for employee benefits, don't forget to consider work comp and unemployment. Huh. And then a reminder, if you what the things that you didn't learn today, want to learn more about, didn't hear, please send that to Chelsea or myself. And with that, Kelly, I'll open it up for questions.
Jim, there was one question in the chat that says, is there a certain compression rate we should be shooting for?
Oh, very good. No, not that. I mean, there's no magic number. No, you're not going to get in trouble if you don't have one. That goes back to a little bit of recruiting, marketing. What is your market for the region? And again, I would point to your MSTA, NEA wage books. You can pull up your region and see what the compression ratios are that you're competing with. Um, and some things that might trigger some thought is, well, we do a great job of hiring new teachers and they stay with us for 5, 6, 8 years. And then they go to our neighbor and you look and you're like, oh, well, yeah, our starting wage is better. But once you get to the middle of the salary schedule, they really start to pass us. And I would suspect that when you look, their compression ratio is going to be bigger than yours. But there's not a target. What helps you retain and value your employees is the main thing.
And some districts obviously are facing some real compression issues with the baseline teacher salary grant that added to that that made the compression really tight in some school districts.
Well, absolutely, and I'm really trying to encourage districts I work with to continue making those steps, and giving raises where you can, but the whole salary schedule build with baseline teacher salary grant and what you can and can't get reimbursed for, um, becomes a little bit complicated. I mean, I've spent more than a minute scratching my head on how to build some of these schedules for smaller schools.
You want to stop sharing your screen and we'll see if anybody's got any questions. I think
Abs-
we've got a group here. You can just open up your mic and ask the question if you'd like.
Jim, this is Landon Gray. How are you, sir?
Hi, Landon. I'm well.
Question for you. So I know in the Kansas City area that, and it may be in St. Louis too, I'm not for sure, but I know in Kansas City that they've kind of, a few districts up there have gone to more of a percentage based versus step based. So taking salary schedules as we know them, like you were showing, and then just applying a flat percentage increase, whether it be 2.0, 2.5, 3.0, whatever, and taking that to every value across the schedule. So basically, you're no longer having the same incremental steps on your salary schedule, and it's going to flow more like a percentage base. Talk to me about what your thoughts are on that dynamic.
Yeah, so that's great. And way back when I was assistant superintendent for a district that had an index salary schedule like that. And that's great, but what essentially you've created is a new schedule. And let's say that it's 3% from for that $60,000 wage earner. And so they get their $1,800 step. Well, let's assume next year that we can't afford that $1,800 for that step. Do then you apply a a negative percentage to bring things back in? So I 100% get it. I love it because everybody gets the same number. The sustainability becomes hard because now you've just created a new floor that can be pretty expensive. Does that sort of answer your question?
Yeah, it does. I know that we at Ozark last year for the first time did that more of like an index across the board. And I think you're fine maybe doing it a few years. I just kind of hesitate to want to do it long term because, like you said, I just think it gets you a little out of whack if times get tight, which times are getting a little tighter. So,
Right. Yeah, and when you go to rework the schedule, because I worked in a scenario like this with a district, is that their schedule had gotten too big and they had to dial it back. And so it was actually a complete rebuild of the schedule. And how do you, when you have to do that, how do you give at least some raises at most places? And then there are other places where people just had to realize either they were not going to get a raise or that, so it becomes really challenging to rebuild that on the backside when you back away from it.
thanks, sir.
Yep.
Any other questions?
Yeah, real quick, is there something, and it may be a law, it may be more of a legal thing, that's going to ask or that's going to dictate whether we are where it has to be a grid system on the pay scale? Or, we had the idea, sorry, that we had a person starting wage is going to be 40. We'll give you $100 for every year you've taught in Missouri, $100 for every year you've taught here, $100 for every year you've had your master's, and so on. does that have to look like a grid system? I'm assuming it does because everybody does it.
Well, it is, I think it is a little bit of a legal question. I don't want to get too far out there on that, but what I've learned over time is um, you can't have one system for one teacher and another system for another teacher on the base salary. Now there's districts have done some creative things like, well, it's a science teacher. Okay, we're going to give them a stipend for preparing labs or something that is not on the schedule. But to say um, you're a master's in 10 teacher of science and a master's in 10 teacher of PE, right now, you are not allowed to pay them two different wages.
I think, and I would defer to your legal counsel definitely when you start getting into these questions. But I've heard one of our firms that works with us on our personnel workshop say there's very little in statutory that dictates how your schedule looks, but you do have to have one schedule for all teachers. It needs to be approved, and it's one schedule for all teachers. So, and like Jim said, there's ways, stipends and those kind of things. But if it has to do with the teaching assignment, what's considered a teacher, the contract time during the day, those all have to be the same for all teachers. So, reach out to your legal counsel if you're thinking about changing schedules. But there is no law that says it has to be columns. There is no law that says you have to give credit for hours, for college hours or for degrees. There isn't anything in statute that says that. So schedules could look drastically different than what we're used to. I've heard this lawyer say you could just pay everybody 50,000 a year and just leave it at 50,000. If all teachers got 50,000, there's nothing that says you have to do anything. But that needs to be the schedule. So anyway, I hope that answers your question. Other questions before we sign off today? Jim's mentioned this, but I would encourage you to email Chelsea Blair at our communications in our communications department. She's our director. If you'll email her anything you want for the 19th. We do have another meeting next week, right, Jim? We're
Yes,
scheduled for a
yes.
topic next week, but then the following week will be a follow-up on the 19th on things that you want to know about trying to build these personnel, to look at personnel budgets. So please email us. Don't forget to do that in the next day or two. And then we'll build something for the 19th around those comments.
Yep.
All right.
Perfect.
Thanks everybody for joining us. Thanks, Jim. Have a great day.
Thank you.